Let's take a look at some information and charts on Tezos for BraveNewCoin. Tezos is a proof of stake network that initially had some trouble with governance and funding in the people side of things. The governance on the protocol side of things has always been clean, clear, crisp. Tezos was really born out of the block size debate with BTC and governance issues with BTC. Since those have happened and occurred, the Tezos way of governance is basically the default way of governance, in that you put up something for a vote, you vote on it, it gets approved or disapproved, and you move on. There isn't this massive schism in development and companies and influencers and people talking about whether or not they want a block size change or not. It's just simply voted on and gets approved or disapproved anyway, the way any good democracy should operate. So from that aspect, that side of things, Tezos has certainly done that right. They are 100% proof of stake, which means you have to make sure that the chain isn't captured by exchanges, captured by VCs, captured by a lack of decentralization. People knock on proof of work for the problems with mining and the environment and all this other nonsense. And they say, look, proof of stake is so much better. But from a centralization, decentralization standpoint, there are trade-offs with both, certainly. Even though you don't need ASICs, you still need to make sure that the proof of stake component is decentralized to a degree. And nobody's going to care about this until there's some massive blow up, right? That's just how it generally is. But when there's an issue like there was with, what was that one? Steemit, I think, when there's some massive governance problem because Binance holds X percentage of the total vote and they can basically do the bidding of Justin Sun, that's an issue for the chain, right? The governance component works well because it's decentralized. But anyway, this is Tezos stats. You can look at all the goings on with the chain here. Supply at 894 million currently, liquid supply of 811. Really for this stuff, I really only care about the baking component or the staking component. And right off the bat, you can see I'm going to have issues with this because the top three stakers, and this is a preview for ETH, the top three stakers on the chain are exchanges, which is fine. It is what it is. People are going to be people. They're going to be lazy and keep their coins on an exchange versus sending them to a staking entity off exchange. But you can see they have pretty significant per share, not 51%, but a significant share of staking. Something else to pay attention to with staking is what percentage does the foundation or the creators of the coin actually hold? Are they getting interest on this? For Tezos, it appears that's the case. One thing to note with Tezos is you need to have a bond if you're a baker. So your bond is 10% of your total allotment of staking component. So that can go way over or way under what you actually need to get the full reward. Binance for a while didn't have enough in their bond to get the full reward, so their reward was smaller. This encourages supply lockup. It's kind of a fluid masternode, expansive type of thing, where if there's a lot of people staking on your bakery, then you need to buy more Tezos in order to get the full reward. And it's just this self-fulfilling cycle. Something else to pay attention to if you are one of these bakers, is what is the commission? If you know anybody, or if you are using Coinbase to stake your Tezos, get off very quickly because they charge a 25% commission, the highest that I'm aware of out of anybody. So not only is it the number one market share, it's also an exchange. They also charge the highest fees. So just go anywhere else that you can to get staking for Tezos because it's going to be cheaper. You're going to get a better ROI. And if we look at the ROI of Tezos, let me just pull it up here. The big thing with staking is the percentage, the reward after inflation has to be greater than what you can get with stablecoins on DeFi. Because if it isn't, you're not going to attract legacy money if they don't want to participate in the volatility risk, which a lot of people with a significant amount of capital investing in stablecoins don't want to deal with the volatility of Tezos or some underlying proof of stake coin. 75% of the network is currently being staked. That is a massive percentage. It is fluid proof of stake, whatever that means as far as being able to do things with it after you stake it. For me, I hold some personally. It's on Kraken. It just sits there, does its thing. I don't think about it. But you have to know your adjusted reward after inflation is extremely tiny compared to what you could get for stablecoins. So really the only reason you do this is if you're like me, if you're bullish Tezos, you're just adding on to that upside because you are getting a percentage, even though it's not a small percentage. You're getting diluted, but you're getting a small percentage on top of the expected upside, let's say. So for me, the volatility risk is upside volatility. So I'm more than happy to buy the Tezos, stake the Tezos, right? Versus the 5 to 10% yield you're getting on no volatility with stablecoins. If you're a baker, you do a little better than that, but not much better. They did recently add a DEX, which is pretty massive for anything. Any DEX components, NFT components, just do everything else everybody else has done that's popular, and you'll be fine. You know, even ADA will be fine if they can actually implement NFTs and DEXs more than just lip service. You know, actually deliver on that. And the first thing I always look at is what is the TVL? It's not going to move the coin price necessarily, but it's going to influence coin price. TVL on this has skyrocketed. The reason this is important is because if you're locking up Tezos, you know, to participate in this stuff, that's even less Tezos that's sellable. You know, on top of the staking component, now we're adding a DEX TVL component. Volume's declining slightly, but still massive compared to where they were. So this still looks incredibly bullish to me from this perspective. Looking at these stats, you just don't want to see TVL decline massively or over time. And so far, it's arguably continued to increase. You can also look at this in Tezos terms, and that has decreased slowly, which certainly is less bullish than it was in July. Volume down pretty significantly since September. But in general, having this is definitely better than not having it from a supply lockup perspective. Looking at the on-chain stats for transaction counts versus average transaction value in the fill here. Transaction counts exploded post DEX adjustment, post NFT boom, whatever you want to call it. And transaction counts are just still up here at a massive all-time high for Tezos. Average transaction value is declining significantly, which is usually an indicator that there are a lot of microtransactions. You can see a big bite in average transaction values here. That was probably DEX related, if I had to guess. And the declining transactions now are probably DEX related. If we look at active addresses in the fill, all-time high basically, incredibly bullish for anything. To see a year-over-year increase in active addresses. Now, one thing you have to be careful with proof of stake coins is that the rewards show up here on the on-chain stats. So the question is, do active addresses that receive a staking reward influence the decision-making processes of people more or less than or equal to coins that are used as a medium of exchange that have active addresses that look like this? I mean, if we look at BTC, for example, and you see active addresses ebb and flow, they're certainly near all-time highs. They're not at all-time highs. But for me, yes, there's a hash proof of work reward here that's baked in that'll influence active addresses. But for me, it's more than that. For me, people use Bitcoin to send value. They don't use Bitcoin to participate in a DEX or kind of do anything else. So to see active addresses here is more of a pure metric than looking at Tezos proof of stake rewards, because all of the proof of stake chains are going to look very similar to this. Even still, active addresses all-time high, NVT, inverse metric of economic utility relative to price, rose pretty significantly, but now is falling again. So this means that the on-chain activity is picking up relative to market cap. And we can also look at MVRV here. And if we look at the price in the line and the MVRV in the fill, MVRV is a measure of market cap versus on-chain activity kind of more directly. For most coins, they top out at a 2x multiple. I suspect that the staking component here is sort of messing things up a little bit because it considers that on-chain activity. NVT and MVRV weren't really tooled for staking. They were tooled for Bitcoin, really, at the end of the day. So that's my caveat using both of these for Tezos. But previously, the all-time high was a 1.27 MVRV. Ish, up there. Currently, MVRV spiked to 1.3 and still rising. So there's not a great signal. There's not a lot of back testing here. You can say, yeah, this was the all-time high. This is what MVRV was. It went all the way back down. It's just a constant increase. So much like DeFi, you probably can't even use MVRV to sort of get any signal. Looking at worldwide Google trends over the past 5 years, we're sitting in the 50 to 75% range. And that is about where you'd probably expect something that's very near all-time highs to be. If something is pushing all-time highs, you definitely want new money, you want interest, you want people looking up Tezos. What is it? What does it do? Where do I buy it? That sort of thing. Usually this matches hand in hand. Once this has topped out, let's say we hit a new all-time high in Google Trends, that's usually the all-time high for price as well. That's another reason to watch Google Trends quite closely. If we look at the MA multiplier, this is the 1 year MA multiplier. So this is the 1 year MA in the green, 5x that in the red, and 2.5 times that in the white, the midline there. Historically, we've never really surpassed the 2.5x midline. We've not really seen a lot of data on this, right? There's not a lot of backtesting. It's fairly new to even look at this time frame. The buy zones have been deadly accurate as far as telling you anything below the 1 year MA has been an excellent buying opportunity. So if I'm bullish Tezos in Q4, which I'm holding a little bit, so I am, but if you're bullish, you'd expect this to go from 13 to 20. I'd expect it to attempt a reach at the multiplier up there. It's never really had continuous strength. It's never really had a big up thrust. It's just kind of chugged along slowly with high volatility. So still, it looks okay. It doesn't look great. It's not bearish by any means. And looking at the 5200 yearly pivot, VPVR volume, RSI, volume's really cooled down significantly. So you want to see that pick back up once we hit all-time highs again. We're still above the 50 and the 200. So the trend looks great. Not a lot of volume support until sub $4. And the last yearly pivot here is at probably 1050 or something like that. The biggest concern really is that, again, Tezos never has really had a big move up. It's gone from 1 to 3 and 2 to 4, 2 to 5. It's never really had a 5x. It's never really had a 10x quickly in a couple months. So that's the only trepidation I have with holding this and expecting a $20 target. That's over 2x from here. Not impossible. Tezos has never really done that for whatever reason. But trend still looks fine. RSI looks fine. Not overbought. There's nothing worrisome here. No bear divs or anything like that. There was a bear div on these higher highs on less RSI. As RSI resets, that gets canceled out. And so on the next higher high, you definitely don't want to see a lower RSI than the previous high. And we saw that here as well. 3 highs, lower RSI. Same thing here. If a coin or chart has a history of bear divs at the top, at the highs, you got to assume if you see that again for the 5th time, for the 6th time, it's probably going to be the top. If we see another series of 3 highs with a bear div, I would get nervous if we weren't at our targets yet. Here's the cloud. We're above the cloud, above the Kijun. We're currently bouncing on the Kijun, this red line here. Things look okay, but if you compare this to any other coin with an actual trend over time, you'll notice how messy this has been for Tezos. Now, you don't need the cloud to tell you this, but if you're using the cloud like I do, it's very bipolar here because it's above the cloud, bullish, below, above, below, above, below. You don't get an extended period of time of set it and forget it ever, really. It's just very short bursts, couple months of entry signal to exit signal. Now, clearly, if you bought the bottom at 2, you're sitting pretty here at 7 to 8. I get it, but most people, that's not how they operate. Even if you bought 260, which would be some diagonal trend line on this triple bottom or whatever, you're still doing well. So trend is fine. The cloud looks fine. 200 looks fine. All this stuff looks fine on the USD side of things. Against BTC, it also has a history of consolidating in these areas. It does have a 50-200 bull cross, but it got denied pretty swiftly at the pivot there. Not a lot of volume resistance on the way up. Just probably needs more time. I wouldn't be trading the BTC pair if I was trading this. Definitely trade the USD pair over this because it just looks harder to trade. This had multiple W double bottoms. It had a bull cross. Everything looked fine on trend. This looked like a bottom E reversal in this zone with VPVR. But now it looks like it's getting into trouble as RSI flips, or it will likely flip towards oversold below VPVR, below the 200. That's not where you want to be if you're bullish. So this probably just continues the range again for the next 2 months. Against ETH, it also doesn't look too pretty. It has a super clean death cross from 2020. It's been bearish the entire time. It hasn't once told you to relong this against ETH. There's a VPVR support down here at 0013 and resistance at 0022 and potentially a massive inverted head and shoulders in the making that may play out into Q1. I wouldn't count on it, but that'd be something to watch. If this plays out like an inverted head and shoulders diagonal neckline with a 50-200 bull cross, then I like some level. I don't think it'll get to 006, which would basically be a 3x. You'd have to measure what this could be. It's probably be somewhere in 005 or something like that. So this does not look bullish yet. I would just continue to watch it over the next couple months. Lastly, I'll just mention the EPTC fund and DeFi portfolio. I trade for Technique Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH through USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all of the trades I make in the trades tab down below through DEXs, as well as the vaults I'm sitting in or may or may not be sitting in at any particular time. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.